What's going on, everybody, and welcome to the video. In this one, we're just going to be talking about, how to live off a $3 million portfolio, how it would work. I know it's a very big portfolio, way bigger than my current portfolio. You could have a portfolio that size, much closer, whatever it is. I just want to kind of talk about how this all works and all the different things, how to achieve these goals, and all the different things that can come into getting a dividend portfolio this big. So if you do enjoy this type of content, obviously you subscribe to the channel and you turn on post notifications so you don't miss out on any of my future content. But let's go ahead and kind of get straight into the video. So first up, just looking at my portfolio over the past week, up 1.16% for the dividend portfolio. And then my passive ETFs are up about 1.6%. Looking at my sectors, tech up 1%, income fund, same thing, banking fintech down 1.5%, restaurants and food up 4.2%, consumer stores up 3.37%, and then real estate up 1.47%. Just kind of looking at everything on my portfolio tracker. If you want access to this, check out the Patreon link in the description down below. There are a ton of different things you can get access to. Really good ways to just kind of manage your stocks and even go value stocks, find new stocks out of your portfolio, or realize that some stocks in your portfolio are overvalued and maybe it's the right time to sell. But just kind of looking at everything, my cost per market value, how everything's doing, per stock performance, up and down. But we can go to the dividend dashboard, which I kind of find to be very interesting, where it does tell you kind of your dividend yield versus yield on cost. And the first thing I want to mention before we get really into living off this huge portfolio is when it comes to this, your yield on cost is going to be so important, okay? You could have a very high yield. Like let's say you could buy a stock whenever it has a yield of 2.5% per se, but then as it continues to rise in price and grow their dividends, things like that, your yield on cost could be like just insane. Like I believe Warren Buffett like a 60% yield on cost on Coca-Cola at one point, which is huge. It might have been 50%, but either way, every like 2 years he's doubling his money or he's making his money back. Incredible things that we're seeing with dividend stocks. And so let's kind of go ahead and just get straight into this presentation. So the first thing I wanted to bring up is dividend stocks, historically speaking, have just performed far better than stocks that don't pay dividends and stocks that maybe pay too much in dividends or just very, very tiny bit. So I'll show you some images after this, but they have historically shown that they provide greater long-term returns and gains rather than any non-paying dividend stocks or growth stocks per se. And then dividend-paying companies are usually going to be more established. They have a solid foundation, maybe a moat in their industry, and they have the ability to perform better at sustainable rates. Growth stocks are often very new. They might not have the most profits. Their cash flows might be negative. They can get hit really big and then have no chance of any recovery or providing investors any returns at all. And then let's show you these images real quick. First up is hypothetical growth of $1 million from 1928 to December 2013. We can just see quintile 1 is the lowest payers, with quintile 5 being the highest, and then there's non-payers. We can see right here that quintile 4 and quintile 5 perform very well. Okay, all these dividend stocks, it kind of just goes up. I'll show you right here. 11.65% is the average annual return when you came to quintile 4. Just kind of saying like maybe they pay, a 50% payout ratio, something like this. It just shows you the power of dividend stocks. And I'll show you a little bit more. The return of the S&P index stocks by dividend policy. We can see that the dividend growers and initiators perform the best. The dividend payers perform the second best. And then the S&P 500 just weighted in total performed the third best. No change in dividend policy performed fourth best. Dividend non-payers performed the second to worst. And then dividend cutters and eliminators performed the worst. Like they actually lost you money over a 47-year time period. Okay. Very interesting stuff to see that from $100 from 1973 to 2020. And then, so let's kind of go ahead and talk about living off this $3 million portfolio. We have a portfolio value of $3 million, an average dividend yield of 4%. Now I'm saying a 4%. My average dividend yield right now is like 2 point something percent, and it's because I'm younger. We'll talk about this in another video. Kind of investing for your time horizon, how you should do this with dividend investing. But 4% yield a little bit on the higher side. But it is very easy to achieve. Annual dividend income about $120,000 a year just off of this dividend yield with portfolio value. Monthly income about $10,000. But remember taxes. I'll show you the tax rates in a second for 2022 and 2023. After taxes, assuming about a 15% tax rate, which is what the average individual is going to have, $102,000 a year, leading to $8,500 a month. And then we kind of just look at it. Here's the tax rates for 2022, and here's the tax rates for 2023. This is kind of like your taxable income, how much you will pay on your dividends and things like that. So we're just assuming a 15% tax rate. And then let's go ahead and look a little bit deeper into this. So how can you plan to achieve these goals? So I mean, like, to be completely honest, I can give you a slide about this and tell you a few very important things when it comes to planning to achieve goals this big. Maybe you don't even want a $3 million portfolio. Maybe you just want a couple 100,000. Maybe you just want a smaller portfolio. First thing I will say is you got to take goals step by step. You can't go from, like me, I have a $13,000 portfolio. I can't just go from 13,000 to 3 million overnight. So you got to take small steps, but let me go ahead and kind of give you some tips to achieve it. So first up is going to be invest in solid companies and ETFs in which you have strong conviction in. Don't go buy stocks because a YouTuber said, hey, here's my portfolio, or don't go buy ETFs because some news article said this. Do your research and make sure that what you're investing in is going to be something that you believe and will perform very well. Next up is invest in accordance to your time horizon and not others' time horizons, okay? This means if you're younger, aim for more growth. Maybe have a higher risk tolerance. If you're older, maybe go for higher yield, things like this. Add as much capital to your portfolio as you can and on a consistent basis, monthly, bi-weekly, weekly, etc. You get the gist. Maybe you want to do $500 a month. Maybe you want to do $500 a week. Whatever it is, whatever you plan to do, and as long as it fits in your budget, in your financials, your personal finances, stick to it. Do not make excuses to not add money if you can. Now, if there's emergencies or something like that, 100%, like, do what you need to do with your money. What I'm saying is, let's say you have $500 that you could add to your portfolio, or $500 that you could, go buy like a crazy jacket or shoes, whatever. Use it the smart way, think about it in that sense. Next up is going to be reinvesting your dividends drip. This is truly vital to success and growth of your dividend portfolio in the long term, and arguably like the most important part when it comes to building a dividend portfolio and letting it compound, the snowball effect and things like that. Next up, you got to be patient, okay? Nothing's going to happen overnight. It's going to be a multiple year process, look for decades. So be very, very patient, got to be consistent and understand why you're doing what you're doing. And then lastly, continue to sharpen your mind and just continue to learn. The more you learn, the more you earn. Very simple. Technically speaking, let's say you think you're a good investor now, but you continue to learn, can read books, watch videos, take courses, whatever it is. You'll learn so much more about portfolio management, how to be an effective investor, and just be very good at earning money. Maybe you're making 9% on your portfolio. You learn a few things, you learn a few different metrics and different stuff. Now you're earning 10%. It's just the small things like this. You continue to read, learn about new stocks, investment opportunities, and things like that. So that's going to wrap it up for this video. If you did enjoy the video, make sure to subscribe to the channel and turn on post notifications so you don't miss out on any of my future content. Thank you again for making it to the end. Check the links in the description down below for some free money on M1 Finance. I believe it's like about a free $100 just for depositing $100. So check it out while you can. And then also check my link in the description to the Patreon where we get the stock valuation spreadsheet, the everything portfolio tracker, Warren Buffett, how he values his stocks, different stock watch lists, tell you buy and sell signals on different stocks and things like that. So again, thank you for making it to the end, and I will see you at the next video.